right, welcome back to the program. In case you're just joining us, welcome. It's Moneyline with me, Nancy Najita. Our first interview. I am being joined right now with Wale Olusi, who is the head of research, United Capital Plc. Hello, Wale, and thanks for joining us today.
Morning, Nancy. It's a pleasure to be here.
Okay, welcome to the program. Let's get started. The Monetary Policy Committee meeting is underway right now as we speak. The meeting started yesterday, the first for 2021. Is it really, I wonder what will be going behind closed doors for those men and women. Yes, I think women, or is it just the only deputy governor that is the only woman there? I'll have to find out today. But you can imagine what will be going on behind closed doors. How do you think that this January MPC meeting is significant?
Well, once again, thank you for having me, Nancy. I think it's a pleasure to be on your show. This is my first time. And of course, Happy New Year to the viewers. I think this MPC meeting is very, very significant, especially for market participants. There's a lot of money involved. A lot of people have, money piled into stocks as well as the bond markets. Both markets did extremely well last year. More than, the stock market did about 50%. Bond market, if you look at the index, also did, close to that. And what that implies is that many of these investors are actually jittery at the moment. They want to know, after months and months of accommodative monetary policy in 2020 on the back of the pandemic, they want to know if it is time for the Monetary Policy Committee to begin to, tighten policy rate. By tightening policy rate, I mean, are they going to increase interest rates or suggest or do anything that will, indicate that monetary policy rates or market yield, which are currently at a record low between November and December last year, and it has improved slightly so far in January. But they want to know if yields will start retracing northwards. So it's actually quite critical. Some of the factors that the MPC are also likely to look at is galloping level of inflation and the fact that the economy is actually in recession. So market participants want to know what they will do so that they will know the position of their balance sheet going forward.
How critical is this MPC meeting with a myriad of challenges, which some you have alluded to? Inflation, the Nigerian economy is in a recession, the worst one in history, really, the worst in 33 years, the second in 4 years. Insecurity challenges mounting all over the country. It's not just about the north anymore. It's about almost everywhere in Nigeria. If it's not kidnapping, it's armed robbery, it's banditry. I don't even like calling it that name. It's terrorism, it's criminality. So you have a whole myriad of challenges. There are FX issues, there are logistics issues, there are supply chain issues. Quite a whole lot. An economy that is not fundamentally strong. All prices though it's trading around 55, 56 US dollars, but it's an economy that is highly challenged. How critical is this MPC meeting for the year?
Well, I think as far as the economy is concerned, of course, general price level and economic activities, it is a critical meeting. It's the first one for the year. It's probably going to, give a view in terms of monetary policy outlook for the rest of the year, which is about 11 months from now. Let's not forget, originally, the, role or the objective of the, Monetary Policy Committee is basically to, ensure price stability. And by price now, I'm talking about interest rate, I'm talking about inflation rate, I'm talking about exchange rates, all those prices that, affect the life of the common man, me and you, as well as corporates. They are also concerned about, growth of the economy. Is the GDP growing? Is it in a recession? How is it going to come out? How do we sustain that? How do we sustain exchange rate stability? Those are the key, factors. And for them to be able to control or check instability or volatility among these variables that I've mentioned, they have monetary policy tools that they apply every now and then for them to be able to do this. But you mentioned a number of other a number of other developments within the socio-political economy that is outside the control of the MPC, and there's largely nothing the MPC can do about that. You mentioned banditry. Other issues include border closure and the recent reopening of that. The restrictions and lockdown due to the COVID-19, the second wave, are other issues that are that are affecting, critical variables such as inflation as well as economic activities that are on the mind of the MPC. So overall, the MPC is concerned about how do we sustain growth? Which monetary policy tool are we going to use that will be effective? For example, there's almost nothing the MPC can do to affect inflation rate again, because when we look at the factors driving inflation in Nigeria at the moment, it looks like most of them are driven by, structural issues such as the banditry, the pandemic, the border closure, and other cost push factors that are beyond monetary, control. So those things, are out of their control, but they can do something about liquidity. They can increase MPR and so on, and that's where market participants, where we come in, we are mostly concerned about, because at the moment inflation is at about 15%, and yield in bond and fixed income markets are well below that. Real return is negative. We also want to be making comments about the exchange rate.
All right, if we take a look at the COVID-19 cases which are rising in the country, and the NCDC has just said that the strain which is found in the UK has been found in among 4 cases here in Nigeria. How imperative is the rising COVID-19 cases in Nigeria, especially if you want to just oppose it with the economic outlook? Should we expect a new lockdown? Should we not expect a new lockdown? How do you think that the MPC might calibrate this as a result of what's going to be happening in the economy on the mid to long term?
Well, thanks, Nancy. I think that's an interesting question. And for the MPC, I am sure they will also, try to weigh into that, because the whole thing about the pandemic and going into another lockdown is really trying to, balance 2 factors that are likely to have the same negative impact on the economy. Should you lock the economy and the health of the people? Should you lock down the economy so that we can save lives, or we allow people to continue their, day-to-day business activities so that we can save the economy and at the same time also save life? The thing about Nigeria is a lot of people depend on daily economic activity for their source of livelihood. So there's the pandemic, then there's hunger. So if you lock them down and you can't afford the lockdown as a government, then a lot of people are going to, have to come out by force because they can't stand the hunger either. So I think, this is what the MPC will weigh, but it's largely beyond their control. I think they will probably suggest to the COVID-19 management committee set up by the president to think carefully before they push us into another lockdown, because clearly most African countries, including Nigeria, which is the largest economy, can't afford a lockdown.
So it's between lives and livelihoods.
Correct.
The struggle between lives and livelihoods. Now, let's talk about what you think the MPC may be advising the central bank to do, because the central bank, especially in the middle or even at the outset of the pandemic, the CBN was the first to react. I remember in March or so, I think before the lockdown, the central bank announced some interventions for individuals and businesses. Do you think that the MPC, after today, would also advise the central bank to continue the employment stimulating interventions that is been doing? Or would the MPC say, come on guys, hold on, let's see how it will go? Or because there are rising cases, a lot of people are still unemployed. Unemployment figures in the country, 27.1%. Underemployment, about 28%. Inflation rates, 15.75%. In fact, when I was doing my calculation of misery index yesterday, I calculated about 71%. So I was like, Almost all of us are miserable in Nigeria, including me. Forget this fine suit I'm wearing and you. We need to measure how miserable we are. So what's your thought on that?
I mean, I completely agree with you. Misery index is at record levels with inflation, devaluation of naira, unemployment level, salary cuts, and so on. Most people earning salaries that are not promoted or, haven't found a new job, they are probably earning less in real time than, they were earning last year. So that's on one side. What do we think the MPC will do? We think with the increasing, possibility of another, partial lockdown, if you call it, of course, the rising wave of a case of the pandemic or the second wave, of course, all these new strains that are being, discovered year and year, and the fact that we can't even afford enough vaccine to vaccinate 200 million people. The last count I heard that Nigeria is considering about 100,000 doses. So we think on the back of that, the MPC will want to remain very, very careful before tightening, monetary policy. They probably will want to maintain status quo so that liquidity in the system can, push economic activity higher. In fact, I think they will be happy to first of all see the GDP result for Q4 2020 so that they will know the direction of things before they now start contemplating any policy hike. Like I said again, the only case to raise interest rate at the moment or tighten monetary policy is the galloping level of inflation. Which is fast approaching 16.
So would you sacrifice that? Would you sacrifice creating employment for galloping inflation? Because a lot of people are out of work. So would the CBN, or would the MPC rather, say because inflation is skyrocketing 15.75%, let's increase it, because perhaps that is the rational economic thing to do?
Exactly. I mean, that's what I was trying to say, that I doubt if the MPC will want to sacrifice job losses and spurring economic recovery because of galloping inflation. Again, don't forget that I've mentioned earlier that it looks like inflation is not completely a monetary factor in this episode, but largely structural factors due to the pandemic, due to banditry and insecurity, due to the former border closure. And now borders have been reopened, so they will also want to see the impact of that, and now that will bring down prices of food.
Okay, I liked what you said earlier in terms of, let's see the Q4 GDP numbers, and perhaps the MPC, perhaps in the next meeting in March, will be able to get a good calibration of what the CBN has been doing in terms of interventions working.
Correct.
But thank you very much, Wale, for joining me today.
Pleasure, Nancy.
All right, I've been speaking with Wale Olusi, who is the head of research, United Capital Plc. Hello, YouTubers. Welcome to Moneyline with Nancy TV YouTube channel. This is where we provide you with instructive business directions, processes, and guidance to help you assess the right resources to fund your businesses to withstand every form of internal and external shock. You will find here awesome informative videos on business, entrepreneurship, and lifestyle, just to help you make informed business and financial decisions. Punch the subscribe button and let us drive you through the world of business. Please follow all our social media platforms on Facebook, on Twitter, on Instagram, on LinkedIn, and follow us for latest updates on our website.